Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Emendary, and I'm joined today with the returning guest, Patrick Yip of APMEX Gold, precious metals dealer, also onegold.com. And this is somebody who has a pulse on the market. We're going to get a real understanding of boots on the ground on what is happening in precious metals. Are people buying precious metals right now? Gold hit an all-time high, 2,070. Just recently came off of that number a little bit. We're seeing inflation numbers out of control. We had, the Russia-Ukraine situation. Last time we spoke to Patrick, this was just right before that. And now we're introducing this. Inflation numbers that have been released have not included what we've seen over the last month with the war. We've seen gas prices go through the roof, higher than we've ever seen it. Price per barrel, by the way, is not as high as we've seen it, but gas prices sure are when you factor in, wages. And I think competition around the world with, countries competing for commodities. We're not in the same place we were years ago. There's more people purchasing oil and commodities and wanting to live a higher standard of living. So that's part of the nuance of what's happening in this global economy. But there's a special discount code if anyone wants to reach out to APMEX or One Gold. Use Street 5 on discount purchases, $5 off of 100 and 100 off of $5,000. Patrick, thanks for coming on Crush the Street with me today.
Hey, thanks for having me on, Kenneth.
Well, again, I think the biggest change we've seen over the last time we've spoken was the Russia-Ukraine, and inflation numbers haven't been priced in with everything that we've seen. In that intro, I kind of alluded to some of the things that we're seeing. Gas prices are at insane levels. I was in California just about a week and a half ago. I filled up the rental car. I had to pay $6.25 a gallon for regular. And I just can't imagine how long that people can continue to do that without reaching a breaking point.
Yeah, it's definitely interesting times. I think, as you mentioned, one of the biggest news is biggest information that came out since we last spoke was the whole Russia invading Ukraine. And I think it's important for people to know how did that happen? How did it affect precious metals? So looking back at it, the Russia invaded Ukraine on February 24th, so a couple of weeks ago now. Gold opened around 1900. We saw a spike up to 1970 during that initial news. So obviously gold responded. Gold has typically been known as a safe haven, so people run to gold in times of uncertainty. And then moving on to March 8th, we saw the tensions escalate. Then we saw gold spike up to 2070. APMEX actually had one of its best sales days ever. So we sold about $25 million in retail product to investors. The interesting thing about it is during that time, silver got extremely tight. So one of the things that Kenneth, you mentioned earlier was One Gold. And what One Gold is, it's an investment platform that allows people to take vaulted positions of gold, silver, and platinum. And One Gold typically sources from the wholesale markets. So getting back onto silver, because of this spike on March 8th, we actually saw premiums on 1,000-ounce silver bars jump to 65 to 85 cents over spot. And keep in mind, before COVID, before any of this stuff happened years ago, these 1,000-ounce bars were available for 3 to 5 cents over spot. So just a dramatically different market. Silver is definitely getting very tight. And then you look now, and what's happened since March 8th is the price obviously corrected. Gold's back in the 1900 territory. And the reason for that is you hear news about Ukraine saying it doesn't expect to join NATO anytime soon. So what we saw is some of the premiums on 1,000-ounce silver bars kind of go down a little bit. Obviously, gold could go up if tensions escalate, or it could decrease if the situation is resolved. But I always like to tell my friends and my colleagues that now is not really a bad time to buy. I mean, you see that gold's corrected from its peak. The broader reasons for gold's bull run, which is inflation, is still very much present.
Absolutely. Well, and one of the things that I wanted to bring up, and that's interesting to me, is that gold has gone up. And I say this because I see it in the retail sentiment. I see it with people, their enthusiasm when we talk about mining companies or talking about precious metals in general. People are they don't have that fear of missing out because gold goes up and then pulls back. And that's what we've gotten conditioned to since we've seen gold on this uptrend. Since 2015, gold goes up. People kind of jump in at the height because they're like, man, this is it. You know, we're in a bull market, but then it goes down again. You know, we see that time and time again. And I think it's a little demoralizing because I know the average person is probably buying when it's going up because they got that FOMO, and then they watch it go down again. So they don't have that reassured feeling that, oh, I bought and I did a good thing. It takes a long time for gold to go back and to get past that point of where they bought. And then, okay, now I feel good again. But obviously you look at a chart, it almost looks so obvious, like we're in this great bull run, but it's the price action that is so interesting to me. And I think a lot of people, they're just not as confident as they should be because of the way the price acts.
Yeah, that's a good point too. I think a lot of things to look at too is a lot of investment classes are cyclical. So let's just look at the past like 20 years and what's happened too. I think it's going to be, my opinion is I think now is a great time to get involved in precious metals. And here's why. So if you look at, let's say the first 11 years of the cycle, so 2000 to 2011, you had basically a lost stock decade, and then gold performed. So stocks started the decade at 1450 for the S&P, and 11 years later ended at 1250. So it was down 14% in 11 years. So basically didn't do much. Gold, on the other hand, started the decade at $250 and went up to $1,900 in 2011. So a 7x gain. So basically good time to get into gold then, not so great time to get into stocks. Moving on to 2011 to now, you saw the cycle reverse. So stocks went up 4x. You see that anyone who got into stocks since 2011 has made tremendous gains. So you saw the S&P go from 1250 to 4800. Obviously, it corrected a little bit from there. And then you see gold. If you've been invested in gold since 2011, it's been a painful investment. You saw gold start at 1900, go all the way down to 1050, and now it's finally getting back to about 1900. I think with inflation here and given the current economic climate, I think it's time that the cycle reverses. Like I said, everything is cyclical. I would not be surprised to see stocks start to struggle in the next several years and gold start to increase. And it's important to note that a lot of times inflation and rising interest rates are generally not the greatest for stocks. So with that in mind, gold made its most recent low in 2015 of about 1,050. Gold went up 5x in the early 1970s. That was from $35 to 200. It went up 8x in the late 1970s from about 100 to 850. I wouldn't be surprised to see a multiple move from the low of 1050. In fact, a couple of weeks ago, I was listening to a podcast with Rick Rule, and he said he wouldn't be surprised to see $4,000, $5,000, or $6,000 gold.
Yeah, I'm hoping that we do see that as well, and I totally see that in the cards. So let's talk about interest rates. The Fed is starting to tighten interest rates. We have inflation that is seemingly out of control. I'm curious to see what they release here in short order regarding the last month, especially as prices have gone up. But at some point, you got to assume that the consumer is going to reach their breaking point where it's kind of like Peter Schiff always points out, the solution to high prices is high prices. Or I think Rick Rule actually, so I've heard him say that as well. And that's true. If you have high prices, people stop buying, and then there's a decrease in the money velocity. And, in theory, things should start to come down again. But when you've printed trillions of dollars and, you have such a screwed up economy as it is that really what you have? So what are your thoughts on this in this interest rate environment and containing inflation? What are our options here going forward?
Yeah, so a couple of things to touch about on inflation too is you look and the Fed's currently reporting 7.9% inflation, which I think is way understated. You look at any commodity chart and it's much higher than 7.9% year over year. But let's just assume you took the 7.9. Let's say, okay, the Fed's right, we're going to take the 7.9%. You look at what's happened in the past. So in the 1960s, it took the Fed 9 years to resolve inflation. In the 1970s, it took 5 years to resolve inflation. So 5 years of 7.9% compounded inflation is going to erode a third of your wealth. And then 9 years of 7.9% compounded inflation is going to erode over half your wealth. So something that I think people need to keep in mind is this is not something that you should just ride out. You need to have a plan in place, and historically, precious metals have done well in inflationary times. Just another comment too is around interest rates. It's like how could the Fed get inflation to go away? What are the tools the Fed currently has? One is higher interest rates. Obviously, we saw the 25 basis point increase in interest rate increase last week. Inflation is currently running at 7.9%, as I mentioned. That's a long way away from the 7.9%. In fact, the Fed actually stated that they plan on having rates to just under 2% at the end of this year and to about 2.75% in the end of 2023. Still a long way away from the 7.9%. I think when we see the March CPI numbers, it's going to be much higher than that. Another thing the Fed could do to potentially reduce inflation is reduce the money supply, but I don't think that's happening anytime soon either. You look at since COVID, and we've printed up $13 trillion in new money. You had $5 trillion for COVID, about $4.5 trillion for QE, and another $3 trillion for quantitative easing. So, or infrastructure bill. Sorry. But yeah, so none of this stuff is going away. I think we're in an inflationary cycle for the next several years.
Yeah, it's kind of sad. I mean, how do you see that playing out for the average person? I mean, I feel like people were very excited to get their COVID checks. They were excited to be home, not working. I mean, even still, they're getting, bonuses on their unemployment. And, it's difficult for companies to get people to work. I mean, we forget about why this figure, the 7.9% figure, is really so detrimental. I mean, I speak to tradesmen or people that are trying to run businesses, getting people to work. They can't get people to work because, the cost of labor is so high, and restaurants are shutting down, and little mom and pop shops. I mean, this is the real economy. And it's like they say, when your friend loses or your neighbor loses their job, it's a recession. When you lose your job, it's a depression. And there's a lot of people that are in a depressionary environment right now because of how bad things are for them. And I'm just curious. I mean, how does this start to really play out? I mean, imagine if this is what 7.9% inflation looks like, what is 10% inflation? I mean, how much more magnified are the problems there are in a 10% inflationary environment?
Yeah, that's a good point too. I personally think the Fed is behind the curve. You look at the 25 basis point increase that they did last week, it doesn't even put a dent in it. And it's important to note too, in the 1960s and 1970s, we had a similar rate increase cycle too, where the Fed kept on increasing interest rates, but inflation kept on increasing faster than the rate increases. And we saw inflation up to about 14% in the 1980s. Or in the early 1980s, which is double what the Fed's saying today. So I think, unfortunately, it's going to be a tough times for a lot of these people who are just getting by. In fact, I was talking to a couple friends or a couple people that I know are kind of in working class jobs, and they were complaining. They said gas is too expensive, can't take my family out to eat anymore. They're like, what do people do? And what I recommended is if you have any assets, definitely get involved in precious metals.
Yeah, it's so true. Yeah, it's so frustrating. And the inflation is so much down the line as well. So many unintended consequences. I mean, the supply chain logistics, for instance, I had to get, a new light installed in my kitchen. We had an issue with our light, and it took the electrician 3 trips because we didn't have the right parts, and it took a month to do this. So I paid double for the installation because of all the problems. And they probably wouldn't call that inflation, right? It's just, oh, we just paid for his time. But the fact that nothing works right is I got to pay for all these inefficiencies. That's not getting factored into the inflation price as well. Or I tried to buy my mom a gift, and, I ended up paying way more for that as well because it wasn't even available. So, yeah, it's such a messed up situation right now. And all that good free money that was flying around in 2020 and 2021, I feel like we're paying for it now. I mean, at the pump and rent and everything that we're doing right now, that's all getting paid for now. And it's that instant gratification that everyone was experiencing, not working, receiving checks, and now we're paying the price for that. And it's very unfortunate. And you know what? I kind of think that they're just going to ramp it up again. I mean, what's stopping them from printing another $5 trillion? I mean, it's just a number at this point to throw at the system and get everything going again and get everyone spending money and feeling good, and asset prices going up, and everyone's happy once again. I mean, what's stopping them from that at this point?
Yeah, I don't think anything is stopping them. You mentioned a thing earlier when you were mentioning the light too. Is one of the things that I hear sometimes too is the supply chains are going to get fixed and inflation is going to go away. I looked into that, and I don't think it's getting fixed anytime soon. You look at it, and I saw a stat where about 90% of all international trade happens on a ship. And if you tried to travel anytime recently, you've known that there's all kinds of crazy border restrictions, things you can and can't do. Obviously, that's slowing down trade because you can't easily load and unload ships. You mentioned there's a shortage of human labor. That I don't think is getting solved anytime soon. And then I think one of the biggest things that COVID did to damage people was the whole psychological damage. You have people that are now afraid to work in crowded areas, or you have people who don't want to go back to work too. Once again, I don't think that's getting solved anytime soon. So I don't think we're going to go back to normal supply chains pre-COVID levels, which is another thing that's going to keep inflation high.
It's so crazy what we're dealing with. I know Elon Musk, I was reading some earlier, and he was selling people. I'm not selling my Bitcoin. I think you need to own hard assets. He likes real estate, and even like stocks for him. He didn't mention gold, which I think is interesting. But he understands that he's very concerned about the current fiat system. The richest man in the world is addressing something that was very much a fringe concept not that many years ago. You know what I mean? Like we have these fringe topics that, we would talk about in, smaller groups and, not on CNBC and mainstream news outlets, but these conspiracy theories, if you will, are not conspiracies anymore. We live in a world where these conspiracies have become realities. And that's where I feel like the volatility is there's no precedent for what the next 10 years is going to look like around the world, for that matter. And that's why I think you do have to look at things that have a proven history and a track record, like gold and like silver. And silver, my goodness, being only $25. I mean, what an opportunity. I've been saying that now for a while, and, people are probably tired of hearing me talk about silver, but it is what it is. When we do have the system break down, you got to be in something. And I don't see a better deal out there than silver at the moment. I don't know, maybe you would disagree with me, but silver seems to be where it's at.
Yeah, a couple points you mentioned there too. Getting back to Elon Musk too, it's interesting. So during that time when he bought Bitcoin, I forgot what it was, a couple months ago, Tesla actually updated their annual report to say they could own Bitcoin or gold too. The unfortunate part is
I didn't know that.
Yeah, the unfortunate part is the gold piece never really made the news. I'm surprised that it didn't, because that's a pretty, I guess, non-mainstream statement for a company like his to want to own gold. But you could look up that annual report. It's actually in there that they could hold up to, a certain position of Bitcoin and gold. I forgot exactly what it is, but it is in there. The second thing you mentioned too is silver, and I think silver is a tremendous opportunity. So I looked at it, just looking at what silver has historically done in the past. So in the past, silver typically rallies after gold and to a much further extent. So two examples here. So the 1970s, this is when gold rallied up to 850 and silver rallied up to 50. So 76 was a low for both metals. And 2 years later in 78, gold doubled. So gold went from $100 to $200. Silver, on the other hand, lagged. So silver only went up 30%. So it kind of left the silver bulls kind of feeling a little frustrated, saying, hey, I should have maybe went into gold. You look at 1979, and both silver and gold were up 4x from their lows. And then during the final year of that run, gold had an 8x performance from its lows, so basically 100 up to 850, and silver had a 12x performance, so basically about 4 and change up to $50. So silver definitely outperformed gold in the mid 1970s. And then fast forward on to the 2000s to 2011s. You had 1999 to 2001 was kind of the lows for silver and gold. They were kind of both gold was about $250. I think silver was about $4 and change back then. Up till 2010, basically the metals had similar performance gains. And then during the final year of the bull run, gold had a 7x gain from its lows, and silver once again posted a 12x gain from its lows again. So the most recent low of silver was $12. Not saying the silver is going to do a 12x gain again, but if it does, that could potentially mean $144 in silver, which is actually kind of interesting, because if you did take, let's say, Rick Rule's target of $4,000, $5,000, or $6,000 gold, let's say you take the middle point, $5,000 gold, divided by 144, you got a gold silver ratio of around 35, which is kind of in line with what we would expect of a bull market.
You're saying $35 silver for
$35 gold silver ratio. Sorry. So I was saying
144 going to 144.
Yeah.
Got it. Yeah, no, I definitely see that. And I mean, the fact is most of us have been in it for at least a little while. I mean, even getting the $12 price, unless you bought some of the ETFs or I mean, it's I don't think many people were actually able to own $12 silver, or maybe some people were able to. But most of us are in it in the 20s here, maybe closer to the 30s. But that upside is still very real. I mean, if you've accumulated now from the mid-teens to in the 20s, maybe up until the high 20s here at different times. I mean, the upside is magnificent. I mean, just going back to its $50 high of 1980, but obviously I think it can go more than that. I mean, 75, 100, 144. I mean, all these are very much real targets for and especially when you compare it to other asset classes that have moved. You look at the Dow Jones, you look at real estate, you look at Bitcoin, silver does have to go higher now, and there's more upside potential because of how much capital is in other asset classes that can move into silver. So it's not even as unrealistic as it was 10 years ago to think it can go there. I mean, this is very real targets for gold, for silver in this environment. So yeah, maybe you can respond to that, Patrick, and just share some closing thoughts here regarding APMEX, One Gold, and just the general importance of owning precious metals in this environment.
Yeah, actually, regarding that target, I read something too that they said about 80% of the M1 money supply was created in the last couple of years too. So just a interesting thought for you to think about over there. But to give a little introduction about APMEX and One Gold, so we like to provide solutions for all types of investors. Obviously, APMEX is one of the largest online precious metals dealers. We'll gladly sell you any of the 25,000 products we have in stock, whether it's gold, silver, platinum, palladium, bars, rounds, coins, numismatics. Obviously, been in business for over 20 years. One of the largest and most recognized dealers. Another way that we also like to sell precious metals is through a platform called One Gold. So back in 2018, APMEX partnered with Sprott, which is a large alternative investment asset manager, to create a modern way to purchase precious metals. So what One Gold is, it's an online investment platform that sells allocated and segregated vaulted positions of gold, silver, and platinum, which are fully audited, fully insured. I personally use One Gold with my own money. The couple things I do like about it is there's low premiums. I typically don't want to pay $10 over spot for a silver eagle right now. So One Gold sells silver for about 2% over spot. Another nice thing is I never need to worry about theft or loss because it's all in a vaulted position. Never need to worry about someone breaking in, stealing my gold or silver. And lastly, too, for anyone looking into IRAs too, One Gold actually offers a great IRA solution. So typically with a precious metals IRA, you have a dealer, a depository, and a custodian, which is hard to buy and sell positions in and out. But with One Gold, since it's all vaulted, you could essentially trade in and out of your gold and silver positions. Maybe you want to take advantage of the gold silver ratio, but a great IRA solution. Check us out at One Gold if you're interested in that. And yeah, like I said, check us out at APMEX or onegold.com. Both companies do have mobile apps. In addition, you can email me if you have any questions. I'm at patrick.yip@apmex.com. That's patrick.yip@apmex.com.
Patrick, you're a superstar. Thanks for coming on the show and just sharing with us your information and news and your research. I think, these interviews are going to be one that we look back on and say, hey, this was very timely, very important. And we're already seeing that as it's playing out in this environment. These black swan events are not really black swan. You can expect things to get crazier because of how crazy things are. The volatility is just going to be that much more as we move through this. So again, Patrick, thanks for coming on the show with me today.
Great. Thanks, Kenneth.